Yeah, good evening all.
Good evening, ma'am. Good evening.
Good evening. Yeah, very good evening. So let's start. We are a little late today. Yeah. So this is going to be the second session about the preparation of trial balance. So in the first session of like how to prepare trial balance, we very well saw that what is the necessity note for preparing a trial balance from the organization's point of view, and is it necessary to publish the results of trial balance to outsiders or to know like any other parties outside the organization. So, which is obviously a no, right? So, those who are no like within the organization, that is the all the levels of management and no like to all the departmental heads and managers. So, sometimes like if the employees are interested, the trial balance can be prepared like at any point of time in the financial year. Okay, so this is prepared to cross check whether all the ledger entries has been posted accurately, just like a cross checking process, and it stands as a basic process for the preparation of the final accounts, but it's not mandated. It's not mandated. Even without preparing the trial balance from the ledger accounts, you can directly prepare the final accounts. But the thing is, like there is some limitations. If at all, if there is an error has happened in no preparation of the ledger account, if any of the entry has been no left out, or no like it has been no like made as a uh, what do you say, duplicated entry. So while preparing the final accounts, it would be a like it would be a chaos. So is it always better for the organization to better first prepare the trial balance before preparing the final accounts? Okay. So we are going to see about the rules for preparation, and there are two balancing methodologies for preparation, and we are going to see about like one or two illustrations like how to go with the balancing the all the accounts both the sides, and classification of errors. So usually errors happens while preparing the trial balance. So we are going to see how those errors happen and what is the reason for those errors and how to rectify those errors. So let's start. You have to excuse me, I have a sore throat. Okay. So to brush up, let us know like because last week, we missed out the class. I was a little busy with the publication works. So to brush up, I'm going to just give you a quick review of like what is the trial balance. It's a list of debit and credit balances extracted from various accounts in the ledger. Okay. So all the entries which we are going to enter in the trial balance, it is taken from the ledger accounts. So obviously ledger is prepared from the journal entries. So journal is the first and basic entry of all the business, like all the transactions, cash or no credit transaction, which has happened, in the organization. So first it starts with journal, then from the journal, ledger posting will happen, and from the ledger trial balance is prepared. And with the help of trial balance, accuracy of the ledger entries are checked. So if the accuracy is good, then finally the final accounts is being prepared, which is profit and loss account and balance sheet. Okay. So the purpose is to check the accuracy of the double entry accounting system and to detect any errors or discrepancy in the ledger accounts. Okay. So there are no three basic rules for preparing the trial balance. The first thing is all the assets, like it has to be made, it has to be entered in the debit column. That is the assets of the company, it has to be entered in the debit column, and all the liabilities that has to be entered in the credit column. So assets of the company, of the organization in the debit column, and liabilities in the credit column. And the second rule is expenses and losses, all the expenses and losses. So whatever expenses, even the miscellaneous expenses, expense from the suspense account, everything, it has to be entered in the debit column, and all the incomes and gains, including interest gained from the debtors and like everyone. So that those comes under gains. So all the incomes and gains that has to be entered in the credit column. And the final rule is the total of the debit column, it must equal the total of the credit column. So both, if you total both the debit and credit column separately, the final answer should be the same. So there shouldn't be any difference at all. So it means all the ledger entries are accurate. So no error has been committed. So very well now you can know like prepare the final accounts. So if there is no balance, if the entry, if the final total doesn't match, doesn't balance, so it means there has no like an error has accounted in the posting of the ledger accounts. So you have to rectify the error on the first basis, check all the entries, rectify those errors, and then again prepare the trial balance to check whether everything is accurate, then go with the preparation of the final accounts. So this is the procedure to be followed. So rule number one is assets in the debit column and liabilities in the credit column, and all the expenses and losses in the debit column, and incomes and gains in the credit column, and the total of the debit and credit. That is separately the total of the debit and the total of the credit. So it should be equal. So it means there has been no error committed while posting the ledger. So ledger entry is no like very accurate. So from the ledger posting or directly from the trial balance, you can take all those transactions and prepare the final accounts. So there are two methods for preparing the trial balance. First one is total method and the second one is balance method. The first one, total method, like it involves all the debit and credit entries are like summed up. They are like added up and each account and entering the totals in the table. So only the totals are like added up, and whatever the sum has like come, so it is just mentioned in the final declaration. So even if there is, if it is not equal, so that doesn't matter. Okay. Say for example, debit is no like more than the credit total, or credit total is more than the debit total. So that doesn't matter in the total method while preparing the trial balance. But while preparing the trial balance with the balance method, it should be equal. The total of the debit and the total of the credit, it should be equal. Summing up the total, it should be equal. So that is the difference. So in case if there is no like indifference in the total of the debit and credit, so whatever is being like whatever the difference is, that is being adjusted as a suspense account in either as a debit or credit. So it is not like adjusted as a suspense account. But the suspense account is something which like usually the company has for day-to-day purpose, like for day-to-day expenses, for miscellaneous expenses, like usually there would be suspense account, a loose cash, in hand. So with that loose cash, they will not buy, the inventory for the company, or they will not buy any asset for the company. So this loose cash, which is called as suspense account, suspense cash, it is used for the miscellaneous purpose, like paying to the the nearby store, the store wala for purchasing like something, or nearby like a tea vendor. So like that kind of thing. Okay, paying to an auto driver. So these are the miscellaneous expenses, or like just giving us a token of gift to the cleaning employee, the janitors of the company. So these comes under miscellaneous expenses, and for these purpose, always the companies maintains a suspense account. That is not a loose cash kind of a sum. So the difference is being like it will be mentioned as a suspense account, and that would be posted in either of the credit or debit columns, and that's how it is being balanced. So we have two methods, total method and balance method. So total method, There is no criteria that the total of the debit and the total of the credit should equal. But in balance method, it is mandatory that the total of the debit and the total of the credit entries has to be equal. Clear? Okay. Now we are going to see about two examples. Okay, like questions would be, like this. Either they would be asking you to prepare, like they would be giving you some entries and in the question paper. Once again. They would be, like giving some entries, publishing some entries in the question paper, and they will be asking you to prepare a trial balance, from the following transactions, whatever it has been done. Or the other way is, they might give you a wrong trial balance, that is, wrong entries posted, in the trial balance, and they may ask you to give a solution with the uh, uh, give a correct trial balance, with the correct, correct entries in debit and credit column. So in either of the way, the questions may be asked. So let's see the first one. So prepare the trial balance from the following. So here are the details. So you have to remember those, like the three basic rules. The first one was all the assets, it should come in the debit column, and all the liabilities, it should be mentioned in the credit column, and all the expenses and losses in the debit column, and all the incomes and gains in the credit column. So let's see one by one. So capital, yes, it's in the credit column, because from organized point of view, if you see, it's an income to the company. So it has been, mentioned in the credit column. Then creditors. So creditors, they come under, it can be taken in either way. So in one way, from creditor, the cash comes to the, or the product comes into the company, that is the organization. Or otherwise, creditors can be, mentioned as a, people, whom the organization is liable to pay. So in both the ways, it comes under credit column. And then bills payable, yes. So it comes under credit column. And sales, it comes under credit column. And provision for doubtful debts. So this term, provision for doubtful debts, is something that you have from the organization has sold goods to a particular individual, or a vendor, or or another company, and that individual or the company so hasn't paid back for a long time. So now the organization decides that it would be a bad debt. Bad debt is something, that the debt couldn't be collected anymore. So you cannot expect that person, or that individual, or that company to pay back the amount, or the whatever the product, the the cost of the product, they would not be paying back. So that is considered as a bad debt. So provision for doubtful debts, it refers to the same, all the bad debts. So that comes under credit column. And interest being, given to the creditors, payable to the creditors, along with the principal amount, principal with the interest. So principal would be something, but the interest alone, it would be, if you add up, from for the organization, 1,400. So that comes under credit call. So all these things, if you see, these are either these are liabilities, like interest to the creditors, and provision for doubt. It's a loss. Provision for doubtful debts is a loss, and sales again, these are what do you say? Sorry, bills payable again, that's a liability. So all the expenses and loss, incomes and expenses and losses, so that comes under credit column, and all the liabilities comes under credit column. So then the remaining one, building, these are the assets, Building is an asset, machinery is an asset, furniture. The debtors here, no, like they lend to the company. I mean, not lend, sorry. They buy from the company, so they are liable to pay back to the company. So it's seen as an income. It is seen as an income. Then opening stock, cash in hand, cash at bank, bills receivable. That is no like the company organization would have no like made a credit sales. So still no like the few parties who have purchased the products, they are liable to pay back to the company. So those come under bills receivable, purchases, carriage inward and carriage outward. So carriage here it means all the transportation and shipping cost or no uh, transporting the products into the company or transporting the products from the organization to the client or to the customer or whatever. So in this case, if the company takes the responsibility of paying the carriage cost, so those no like those two can be no like taken no like as a what do you say? So as no like it comes under debtor column. Then general expenses, insurance payable, bad debts again, audit fees that is payable, traveling expenses, discounts, sales return, and investment. So all these comes under debtor column. So you have to know, make sure the rules are applied correctly. That is, all the assets in the debit column and all the liabilities in the credit column and expenses, losses in the debit column, incomes and gains in the credit column. Let's take another example. So here, if you see miscellaneous expenses. So this is an important point. So miscellaneous expenses is always considered no. So it comes under no like debit column, miscellaneous expenses and prepaid insurance. Prepaid insurance is something where the company or the organization pays in advance, pays for the insurance in advance. So that is prepaid insurance and bills payable. Bills payable something is like the organization is liable to pay to its vendors. So bills payable and outstanding salaries again. So the company is liable to pay to their employees. So both these comes under credit call. So other than that, all the assets, capital, stock, debtors, machinery, cash in hand, sales return, and sales return here is considered as no like capital. Sales return here is considered as no like incomes. We are because no like anyhow the product will be no like sold to another party. It's not going to be a loss. Whatever products no being sent by no a vendor or no like another company. So this organization is going to sell again the product, resell the product to another party. So it's always considered as an income. And yes, the other things, no, like purchase, wages. So these things comes under debtor and no, like the bills payable, outstanding salaries. These comes under creditor. So this is how no, like from the ledger accounts, the trial balance is prepared. So either they will be asking you to know, like they may be giving you a few ledger entries and they would be asking you to directly prepare trial balance from there, or they may be like giving you few transactional entries and from that you have to prepare the trial balance, or sometimes like a prototype of a trial balance would have been given with wrong entries and you have to prepare the trial balance with correct entries. So in either of this way the questions may be asked in your question paper, the university question paper. Okay, so let's see where errors happen. So usually most of the time, no errors happen while preparing the trial balance because the errors would have been no made while preparing the ledger. I mean, while preparing the ledger posting. So there are two types. I'm sorry, there are four types actually. Yes, four types. And these errors, no, it's not made intentionally. Usually, like these type of errors, they are not made intentionally. But no, sometimes no, like out of overseeing something, or no, like missing out few entry, or duplicating the entry. So this may create a problem while preparing the final accounts. So that's why it's always better for the organization to prepare the trial balance before preparing the final accounts. So here trial balance acts as a checkpoint. It acts as a checkpoint to check whether the ledger entries are accurate. It's correctly made. So that no, like from the ledger, the final accounts is prepared. So there are no four types of errors, no, usually committed by the accountants, or whoever prepares the account statement. The first one is errors of omission. So errors of omission is something where the entry is completely omitted. Again, it's not intentionally made out of no like overseeing, or no maybe no like for some other, due to some other reasons, few entries or no any such any one entry may be no completely missed out while preparing the journal, or from the journal when the ledger posting is done. One such entry may be no completely missed out. So this may be the reason, no, like why there would be a indifference in the trial balance debit and credit column. So errors of omission and errors of commission. So this error occur no like while there is a double entry of no one single transaction, or recording of the wrong amount or date. That is no while repeating the date, not mentioning the correct date, or not mentioning the correct amount, or posting into a wrong account. That is, instead of posting in the debit, it would have been posted in the credit, or instead of in credit, it would have been posted in the debit. So such kind of thing. Or making a mistake in calculation or balancing, or using a wrong exchange rate, not exactly accurately calculating the exchange rate. So these may be considered as like errors, and this can be rectified. So once a trial balance is prepared, and when you see there is no balance is happening between debit and credit total, so errors of commission can happen. The third one is errors of principle. So, if you remember, we saw that no, there are few principles, accounting principles to be followed, no, before preparing accounts. So, sometimes, no, the accountants or the employee responsible for preparing the accounts may would have no not purposely again, would have completely forgotten the principle, or would have not taken into consideration no any particular principle. So completely avoiding the principle, the entry would have been made. So in that case, no, like obviously the errors may happen. That is recording the revenue expenditure as capital expenditure. So capital is something different, revenue is different. Capital is something where the owner of the business invests in the business. So again here, uh, in owner is seen as a different entity, organization is seen as a different entity. Organization is liable to pay to the owner. So any part of in any time, no, the organization is liable to pay to the owner, because the owner has invested in the business name of capital. Whereas revenue is considered no like when sales happen no from the company side by selling their product or service. So revenue is different, capital is different. And valuing an asset as its market price instead of cost price. That is, instead of mentioning the cost price, the actual cost in which no the product has been purchased, instead of mentioning the actual cost price, the accountant would have no like mentioned the correct current market price of the product. So completely violating no like the principle of the account. So if you remember, one of the principle is principle of no like the business entity, like seeing business as a different entity, and seeing the other parties, no, like whether the investor or the shareholder or whatever, no, other parties as a different entity, and whatever the present condition of the, I mean, whatever the actual cost being incurred in purchasing the product, so that has to be entered in the account and not the market price or the price which is no prevalent outside the organization. So these are few principles, no, while preparing the account. So completely forgetting that or completely avoiding those principles, so these entries would have been done. So that also causes a problem, and the balance wouldn't be, no, like the balance would not be matching while preparing the trial balance. And then compensating errors. These are, of course, errors, but that it will not make a, no, like it will not be a big issue, or no, it will not be a big problem while preparing the trial balance. Compensating errors is such that if a wrong entry, no, is made in the debit column for say 150 rupees, the equivalent credit column would have been, no, like made with a wrong entry for same 150 rupees. So here you can see both are balanced. It's a wrong entry, of course. That shouldn't have happened. Yes, of course. But it is mentioned both in debit and credit column. And if you see, the amount is the same. So obviously the total becomes balanced. There is not going to be no any difference in the total because of this compensating error, which has been the error which has happened in both the sides of the accounting column, that is on the debit as well as on the credit, for the same reason. So these are called compensating errors. So so what we can do is either you can know like completely erase that particular entries no from both the sides, from the debit as well as from the credit side. So that is the best way to do. But sometimes companies, few companies, no, like oversee this and no, just they just leave it because what to say, no, they would have no like made this entry, no, like from the starting itself, from the journal, from the ledger, and everything would have been done. Now, while deleting this particular entry, they it would be no like a big problem, no, like by no changing everything, no, right from journal and right from ledger, it would be a tremendous work for them to do. So to avoid this, sometimes the company, like they may, like oversee this and let it go. Anyhow, no, the difference is not going to be anything, no big. So sometimes they let it. So four errors can happen: errors of omission, errors of commission, errors of principal, and compensating errors. To sum up, so these kind of errors no may happen. Wrong totaling of subsidiary books. So you're not know when you're adding up the total. So the total, the sum, the total, no, like it may be a wrong one, and posting the wrong amount. Instead of 100, you may be posting 1,000, or instead of 1,000, you may miss out 10 and post it as 100. So wrong amount. Posting on the wrong side of the account instead of debit, it would have been posted in the credit and vice versa. And posting twice to a ledger, that is duplicate entry. So two times same entry being posted to the ledger, and that also creates imbalance in the trial balance. And omission of an account from the trial balance, completely omitting an entry, again not purposefully, not intentionally, because of no like some other reason, or overseeing something, no, like completely an entry would have been no completely omitted. Wrong additions or balancing of ledger accounts while balancing the ledger account. So you remember we were no like writing brought down, carried forward, and everything. So when that thing is no like wrongly done, here no the balancing would have been that becomes a problem. Then balance of account written to the wrong side of the trial balance. Again, while preparing the trial balance, if no like instead of in the ledger it would have been in the debit column, but while posting in the trial balance, if you are making it in the credit column, again it's a wrong entry. Then errors made in preparing the list of debtors and creditors. So you like the accountant maybe like uh, wrongly writing of debtor as a creditor and the creditor as a debtor. So again, there is a error happening. And errors made in carrying forward total from one page to another page. So when one side of the account page or no, like whatever it is, it's getting over, whatever the total, no, it has been no added up. So that has to be carried forward to the next page. So if that has not been done, obviously there would be error where double entry is incomplete. So you have made a debit entry, but you haven't made the corresponding credit entry, and vice versa. You have made a credit entry and there is no corresponding debit entry. So
ക്ലാസ്
again, there is a problem. Omission of an account in the opening entry. So while opening the entry, there is no completely omission of an account. So again, carry forward, brought down. So you're completely, like sometimes avoiding it or completely, like forgetting it to like make it as a point. The wrong amount of capital in the opening entry. So capital itself, like it's made as a wrong entry. So few people would have, like few accountants or like or people responsible for preparing accounts, they would have mentioned it as instead of like capital account debtor to cash account, they would have mentioned as cash account debtor to capital account. So that is again a wrong entry. Then wrong casting of trial balance totals. When you're adding up the trial balance totals, that is adding up the debit column, adding up the credit column, you see there is an indifference. Sometimes it may not be the reason that there is a wrong entry in the ledger, but there is a chance that summing up, the totaling of the entries, that may become wrong. That would have been made wrong. That is while totaling. So these corrections has to be made and these errors has to be, like avoided so that, the final accounts preparation would be, like easy. So how to rectify these errors? There are few ways to rectify these errors. And so first point is, while errors affecting trial balance can be rectified by passing journal entry along with the opening of a suspense account. So here suspense account no comes in help. So as I said, suspense account is something where the company maintains so a loose cash no in hand always. So suspense account, it can be taken as no asset to the organization, that is cash in hand, and whatever no, if there is an imbalance in the debit and credit total of the accounts, the trial balance. So the suspense account no can be made as an entry so that the balancing would happen. Other than that, we can check for the other rectifications as well. That is, classify the account having an error. First, go with the classification. Identify what type of account it is, whether it's a real account or a nominal account or whether it's a personal account. So classify which kind of what kind of accounts it is. Then check the appropriate ledger entry. Then go to that particular entry and check whether that entry has been made right or not. If not, correct it in the ledger entry and then again cross check with the journal entry as well. So this is how you have to do. So first go to the correct classification, identify the classification of the account, then check with the ledger and then cross check with the journal. Second point is check the shortage or excess in the account. So while adding up the total on the debit and credit column, so always check the shortage or the excess. So either debit is in shortage or credit is in shortage or debit is in excess or credit is in excess. So easily you can identify where the problem has happened. And while identifying shortage and excess, if there is an excess credit and shortage in debit, so that difference should be debited from the account from the difference amount. Or if the excess debit is there and shortage of credit is there, then credit the account with the difference. That is, on the credit side, the entry should be made with the difference amount. So that is how it has to be balanced. In the first case, there is a shortage in debit and there is an excess in credit. So the excess amount, it should be made it in a debit column and it should be balanced. The difference amount should be made it in a debit column. And in case if there is an excess in debit and shortage in credit, so here the difference amount is made as an entry in the credit column. So finally, the suspend account is debited or credited. Whatever, again, whatever the difference is, the suspense account, no, it's made as a suspense account debtor or creditor, depending upon where to make the entry, either in the debit or in the credit. So this is how it is done. So to completely avoid the accounting error, so these steps are followed. First thing is maintain consistency. And the forms are consistent. So the organization has to make sure all the forms are consistent. So employees know what to expect when entering data to the accounting software. So if it is a physical document, uh, there are no like few rules to be followed, like after this, so after this. But while the software is doing all the accounting calculations, so all the forms like the first entry would be like making it as a journal entry. So automatically the system calculates and automatically updates the journal entries to the ledger entry and automatically creates a trial balance from the ledger posting if you're asking the software to do it. Okay, so this is how it is done in the software. So the forms it should be consistent, like after this in that way. Second thing is hire knowledgeable employees. Or if there is a new employee, give a proper training to that employee before making him or her go with the the entry for all the accounting transactions. And then double check entries. So double checking the entries, of course it consumes some time, but it's always better to double check the entries. Usually organizations do it only at the end of the financial year because they want to submit it for tax purpose. So or when for auditing purpose, only at that time, this error checking or double checking the entries, that would happen. So it is always better for the organizations uh, to identify the entries, whether it is wrong entry or right entry. And if there is a wrong entry, I mean if there is a error happening in the trial balance, immediately that has to be rectified. So they shouldn't postpone till the end of the accounting year. They shouldn't postpone till the audit team arrives to the organization. So it is always better to make it done in the first place. Then go for accuracy instead of speed. So don't rush the process. Like I have noticed, like one organization that day-to-day entry, day-to-day transactions will not be maintained in their accounting software on a day-to-day basis. So they would, like at the end of the week, like by Thursday or Friday, at the end of the week, they will like sit with the physical documents and everything, and they will like rush up the process of like entering all the entries in the system. This is software system. So that is the wrong way of like bookkeeping. So never do this. So don't rush the process. So on a day-to-day basis, like spend at least 5 to 10 minutes time. So the whole thing, whichever happened on that particular day. So make all the entries, recorded either in the physical document or in the software. Use accounting software. So it's better, always better to use accounting software instead of going for physical documentation. So now almost all the organizations have like their own accounting software. Very famous accounting softwares or Tally ERP 9. I think version 9 has come. Yes, Tally ERP 9 and QuickBooks. QuickBooks is a US based like accounting software. So initially they were selling out all the tax forms and the postal forms and everything for filing no tax purpose. So that was their no like actual product. They came up with that product no in the initial stage. Then slowly they know like started with the accounting softwares as well. So then we have Zoho and no like many softwares has come up. So very no like famous softwares or no like QuickBooks, Tally ERP 9 and Zoho and perform timely account reconciliations. So reconciliation is something no like where you have to know like get the maximum no like information out of an accounting transaction. So usually we do it while preparing the journal, no, like we usually know, like we write the uh, um, what do you say, the narration of the transaction. So after mentioning the transaction and after mentioning the amount in the debit and credit column, so always there is a narration which follows. So there's always for a good and no, like it will always help the accountant or whoever is preparing account, no, while cross-checking any of the entries, no, while preparing the final accounts or while preparing the trial balance. So it is always helpful no to go with the narration or no for account reconciliations no and with the external sources. So external sources here it means banks as well. So if there is no like any transaction, no like happening between the organization and the bank, not just only no like check deposit or cash deposit or no check withdrawal or no like cash withdrawal. So not only that, there are many things like no brokerage commissions, interest, and bank overdraft. So everything, no like so make use of those reconciliations, like to the maximum extent so that the company would be saved at the times of no risk. So you can get help from the stakeholders, from the banks and from all the parties who are connected with the organization, even from the suppliers. So you can take the company can take time and pay back no later. So these are the no like ways to completely avoid the accounting errors. Clear?
Yes, ma'am.
Okay, fine. So any doubts as of now?
No, ma'am.
Okay. Can any of you mention no like anyone is no like in the accounts team or accounts department? So what kind of software, accounting software you're using in your organization?
In our office, we are using Sun system. Sun system.
Sun Systems.
Yes.
Okay, so it's an accounting software.
Yes, correct.
Okay, okay, fine. So it's a US-based company or
That, to be honest, I don't know because I'm not from the accounts person, but we know
okay,
because.
okay, okay. Thank you. Anyone else? ERP, like it's an excellent form of maintaining the accounts, the enterprise
That is
resource.
Tally, no, ma'am. Tally ERP, correct?
Yeah, yeah. Tally ERP, no, it's especially only for like accounts purpose. But if you take the general ERP, so it not only like focuses on accounts, but it covers all the departments of the organizations like marketing, sales, and like human resources, procurement, and like everything, almost all the departments, even if there is a production unit, even it covers the productions as well. So ERP covers almost everything in the organization. The general ERP I'm talking about. So Tally ERP, it's especially for accounting purpose.
My company, we are using SAP. It's kind of
SAP.
ERP.
Okay, good, great. Okay. ERP is an advanced version of SAP. Yeah.
Yeah.
So, okay. Okay, so hope there are no other doubts. So next session, no, we will see about preparing the final accounts, like the profit and loss account and the balance sheet. So let me see if I can no cover both the topics in a single session, or we can see only the profit and loss account, how to prepare it in the next session, and maybe no the other session, the last one, we can no see how to prepare the balance sheet. Okay. So if there are no other doubts, you can no leave the session.
Okay, thank you.
Thank you. Thank you.
Thanks, ma'am. Thank you.
Thank you, madam.
Well.
Thank you.
Hello? Mom, can you hear me?
Yes, I'm still in line. I can hear you. Yeah.
No, can we have your syllabus? What are the things you are going to, teach us? Can I have, list of subject that you are going to teach us? So because whenever we come to the class only, we know what you are going to study. So if we have the subject, we can just, get it prepared.
Usually when I know take any subject, for example, like this accounts, it's happening for past 7 or 8 weeks. So I cover the maximum, important aspects and all the important points from one particular subject. So once it is done, then I move on to the next subject. So that's how it goes.
Okay. So there is no a list of subject, list of content, right? So we have to, we will come to know only when the class is over.
It would be it is already previously would be getting the information that the forthcoming class would be based on this subject.
That's correct. I understand. But if you can give us initially a list of the, subjects are going, these are the subjects you teach, and then, under BBA is like this.
Mm-hmm. Okay, okay. So I'm covering all the the basic subjects which is common for all the BBA with the specializations. BBA General, BBA Finance, and BBA HR or whatever, aviation, so hospital administration, logistics. So I cover all the general subjects from the BBA.
Fine, perfect.
Yeah, accounts is a common subject, for all the BBAs. So in that way, yes, I cover all the general subjects.